Thanks for checking out this week's FinPrep Trading and Investment video newsletter. So we're even more overbought on the SPY than we were the week prior. Bit of an up week, but still, it seems as if caution is warranted just given where we are, how quickly we moved off that 208.50, 200-day moving average. It seems as if a bit of rest is in order. NASDAQ finally did kind of play along a bit this week, did find some resistance in around these kind of like three tops here, this 118 level. Not to say that further upside is out of the question, but it is good to see that NASDAQ may be joining the party. A bit late though, but we'll see what happens. New all-time highs on the small caps, IWM, Russell, ETF, as well as your mid caps. So this is fairly favorable then to the overall equity market in terms of perception when you're seeing these riskier segments of the market or more volatile segments of the market break to new highs and finding participation. This generally, again, would be fairly favorable for the overall equity markets looking forward. TLT really didn't find too much of a bid, unfortunately, around the 120 level. So did gap up on Monday, but yeah, here we are closing right back down there, this 200 and 250 week moving average. So just it's been quite a bloodbath in bonds, and we look for an eventual end to such a move. So basically, should we, in the event we do lose this, potential area of longer term support, channel bottom again is not terribly far below. So again, on a weekly basis, looking back to 2011, we have this long-term price channel extending in through 2014, where we had our most recent extended move, and then here we are drastically dropping potentially into it. We'll see, but definitely interested for a swing along in around this 116 area should we get there. It's seemingly quite overdone already, but you can't rule anything out. So dollar did hit top of its range already, so very quick move off that 25 resistance. Within 2 weeks, here we are posted up right at this 26, approximately 25, which coincides with your secondary peak extending back into 2015, and then ultimate top of range is 26.50. So you have to ask yourself here, with dollar being overbought and in prior peaks and at the top of your price channel extending back to about May of this year, their question has to be, is there a short-term trade for downside in the dollar? Typically, we look for that in gold. However, gold kind of, it reminds me anyways of like the TLT chart, where you are along the downside of this price trend, but it's seemingly incapable of finding a decent bid, similar to TLT, where sure, you were down here, you had a few bounces, but it didn't feel as if it had any conviction, so to speak. So I don't know that we'll get such a dramatic blow off down into like a 210 or 110 would be quite interesting on GLD, or if it can actually find support here, but definitely not looking for GLD currently for a swing long. GDXJ, however, was a fantastic trade on Monday. Gap down by recollection about 3%. High of day was about 3% up on the day, so about a 6 percentage point swing, and it made sense to take profits and run, and that we did. About 2/3 of the way into this bar, and then again, your declining 9 EMA actually functioned as resistance, and so here GDX is drifting downwards. So well done on the GDXJ trade. The bounce did materialize as it did in junk bonds, which we'll look at here. Junk bonds then 2-day bounce and then a bit of a fade. So we're basically range bound now within your short-term daily moving averages, your 15 or 20, and then your longer-term, your 200 and your 250. So this could persist for weeks. It's not a setup I like to take. It's a good way to get chopped up. So, and generally, just having price been broken out of this strong uptrend, it doesn't argue well for further upside in junk. Similar to gold, right, where we had price within a strong up channel for a considerable period of time, approximately half a year, and once you lose that, it doesn't get clean for some time. So. All right, so copper did pull in a bit and actually is resting atop its 9 EMA. So, does this continue sideways, work off some of this overbought condition, or do you lose it? It kind of reminds, it's reminiscent of like a late morning trade where you miss the chance to kiss the 9 EMA, and then once you start drifting alongside it from the top, you wonder, is it going to roll over and break these lows essentially? So, see what happens. But copper, yeah, we'll keep that on the radar. Similarly here with yen, right, so where you had a strong price channel breakdown and it just doesn't end up looking any better. So on the yen, we ended up losing the 50-week moving average as potential support. So, and again, this highly correlated with gold, so generally doesn't look terribly good. Looking for potential support, perhaps a base within like 86 to this 84.5 range if we get further downside in yen. At that point, then the GLD chart perhaps starts to look a little bit more interesting. All right, so finally, the piece that interests us most early next week, unless we get a gap down, is euro. So we're essentially closed right here at this low, extending back to March of 2015, this low trading range, about a year and a half. So general protocol is, looking for a potential long at the bottom of a trading range and looking for a potential short at the top, similar as we did with UUP, around the 25 for a potential long, and then around currently where we are, 26 and a quarter, 26.50 for a potential long. So there could be room. Folks are already talking about seeing euro down to parity with dollar. It's about 106 on the currency pair. So there may be a potential short-term bounce here, and perhaps it does break to new lows. But in the meantime, there could be a counter trend move to be made. So that is what we're looking at early next week, guys. All right, take care. Thanks for checking us out.